Folks, sometimes the smartest investors understand that you don't need thousands of dollars to start building real wealth in the stock market. Even a small amount, just $600, can turn into something massive when placed into the right companies with strong dividends, reliable cash flow, and decades of consistent growth. That's why today, we're talking about 3 of the smartest dividend stocks to buy with just $600 right now. 3 companies with huge potential in the upcoming months that could take a simple small investment and turn it into something much bigger. Before we start, if you are serious about making money in the stock market, make sure to watch till the end, and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks and long-term opportunities in the market. First on the list is Coca-Cola, one of the most iconic companies in the world and one of the most powerful dividend machines in all of stock market history. The Coca-Cola Company, trading under ticker symbol KO, is a global beverage giant responsible for some of the most recognizable brands on the planet, including Coke, Sprite, Fanta, Minute Maid, Smart Water, Dasani, and hundreds more across sparkling drinks, bottled water, teas, sports drinks, coffees, and juices. It operates in virtually every country on Earth, and its distribution network is so massive that Coca-Cola products are sold in more places globally than clean running water. The company's brand loyalty is unmatched, and its product lineup is built around everyday consumer demand, giving it stability regardless of what's happening in the economy. Coca-Cola's recent performance shows just how strong the business remains today. In its latest earnings report, the company delivered 5% revenue growth, bringing total net revenues to $12.5 billion. Organic revenues also increased 6%. Driven by a strong 6% increase in price/mix as the company maintained demand even while adjusting price levels to navigate global inflation. Concentrate sales remained even, with a slight 1-point gap behind unit case volume due to shipment timing. Coca-Cola's operating margin reached an impressive 32%, showing exceptional cost management, and comparable operating margin came in at 31.9% despite marketing investments and currency headwinds. Earnings per share grew a massive 30% to 86 cents, though the company did face a currency headwind that restricted some upside. Even on a comparable basis, EPS grew 6% to 82 cents, showing the company's resilient profitability. Coca-Cola also gained more value share in the key non-alcoholic ready-to-drink beverage market, proving that its brands remain in high demand. Cash flow performance was strong as well, with year-to-date operating cash flow hitting $3.7 billion and free cash flow at $2.4 billion. Excluding a one-time Fairlife contingent consideration payment, free cash flow jumps to $8.5 billion. Coca-Cola currently trades around $71.16, and Wall Street analysts have an average price target of $79.08, with the highest target hitting $85. That suggests strong upside potential while still paying one of the safest dividends in the world. The second stock on the list is Campbell's, another powerhouse brand with decades of consumer loyalty and a growing presence in the pantry and snack food markets. Campbell's Soup Company, trading under ticker CPB, has grown far beyond its classic red and white soup cans. Today, the company owns a broad range of leading food brands that millions of households rely on every week. These include Goldfish crackers, Prego pasta sauces, V8 beverages, Lance crackers, Pepperidge Farm cookies, Cape Cod chips, Snyder's pretzels, and many more. Campbell's strategic evolution in recent years has transformed it from primarily a soup company into a diversified packaged food leader with a strong focus on snacking, one of the fastest-growing categories in consumer foods. Campbell's recent financial performance reflects both stability and strategic growth. Net sales increased 4% to $2.5 billion, with organic sales rising 1%. EBIT landed at $161 million, while adjusted EBIT rose 2% to $362 million as the Sovos acquisition contributed positively. EPS came in at 22 cents, and adjusted EPS was 73 cents, down 3% due to higher costs. Despite some margin pressure, Campbell's remains financially strong, producing $872 million in operating cash flow year-to-date and returning $403 million to shareholders through dividends and buybacks. The company reaffirmed its 2025 full-year guidance and expects adjusted EPS at the low end of the previous range, excluding the impact of tariffs. Current tariff conditions could create a small headwind of up to 5 cents per share, but overall, the company's long-term trajectory remains positive. With a current stock price of $31.29 and an average Wall Street price target of $33.33, analysts still see room for upside, with the highest target reaching $39. What sets Campbell's apart for dividend investors is the strength of its brands, the consistency of its cash flows, and the stability of its business model. As long as households continue filling their pantries with Goldfish, Prego, V8, and Pepperidge Farm favorites, Campbell's will continue to generate reliable revenue and reward shareholders. Its strong product diversification, focus on snacking, and ongoing operational improvements position it to grow steadily in the coming years. And finally, the third stock on this list is Corteva, one of the most important agricultural science companies in the world and a critical player in global food production. Corteva, trading under ticker CDVA, develops and sells advanced seeds, crop protection products, biologicals, and innovative agricultural technologies used by farmers in more than 110 countries. The demand for Corteva's products is not optional. It is essential. As the global population rises, agricultural output must increase, and innovations in seeds, crop protection, and biotechnology are necessary to help farmers produce more food with fewer resources. This is exactly where Corteva shines. Its technologies improve crop yields, help protect crops from disease and pests, and support sustainable farming practices. Corteva's financial performance remains strong, reflecting the ongoing global demand for agricultural technology. Net sales increased 4% year-over-year, with organic sales up 6%. The seed segment delivered a 5% net sales increase and 7% growth in organic sales, driven by a 3% price/mix improvement and increased corn area in North America. Early deliveries in Latin America also boosted volume. Crop protection saw net sales rise 3%, with organic sales up 5%. Volume increased 7% due to strong demand for new products and biologicals, although pricing declined 2% because of specific market conditions in Latin America. GAAP income came in at $1.74 billion, with EPS at $2.54, while operating EBITDA was $3.40 billion and operating EPS reached $3.11. Corteva updated its full-year 2025 guidance, projecting net sales between $17.7 billion and $17.9 billion and operating EBITDA between $3.8 billion and $3.9 billion. Looking ahead to 2026, the company expects operating EBITDA to land around $4.1 billion at the midpoint, signaling major long-term strength. Corteva currently trades around $66, and analysts have set an average price target of $78.31, representing nearly 18% upside, with high-end forecasts reaching $86. As a dividend stock, Corteva stands out not just for its strong financial position, but also for its extremely conservative 22% dividend payout ratio, which gives it enormous room to grow dividends in the years ahead. With its critical role in global agriculture, increasing demand for food production, expanding seed and crop protection portfolios, and deep technological pipeline, Corteva is a long-term wealth-building machine. Well, that concludes our list of the 3 smartest dividend stocks to buy with just $600 right now. These companies offer stability, strong financial results, powerful dividend potential, and long-term market relevance. Everything a long-term investor needs. If you got value from this video, make sure to subscribe, turn on notifications, and stay tuned for more deep dives into the best stocks in the market.